Shares of Coinbase dropped about 3.5% on Friday after the company reported first quarter 2025 results, and the results weren't all that bad, but investors were just looking for a little bit more. Estimates were a little bit higher than what the company delivered as far as revenue goes. But I want to dig through the results because this is a company that continues to mature, and they actually made a big acquisition announcement this week as well. So a lot of news for investors to process. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's start with the revenue segment for Coinbase. And this is where I always start by looking at their earnings report, because it tells you how much of their business is coming from trading, how much is coming from non-trading. So the first section here is going to be their trading revenue. You can see that in the first quarter, $1.1 billion worth of trading revenue from consumers. They have a big institutional business, but that's much, much lower margin. So that was a little less than $100 million. Both of those were down a little bit from the fourth quarter. You may remember fourth quarter 2024, that was when the election happened. There was a boom around cryptocurrencies and crypto trading. That was a real benefit for Coinbase, but that didn't last entirely into the first quarter. So things are up from where they were a year ago, but just not a huge bounce in that past year. Where there has been significant improvement is in what I think is much more important long-term. That is subscription and services revenue. You can see that the first line item here is stablecoin revenue. Most of this revenue comes from their partnership with Circle, who runs the USDC token. Coinbase actually started the USDC token with Circle. They changed that arrangement, I believe it was last year or the year before, but now they got a stake in Circle. Circle may go public this year, so we'll see what that value is worth. And then they get a revenue share based on the amount of assets that are on its platform. So that was almost $300 million in this most recent quarter. So that's a run rate of well over $1 billion, almost $1.2 billion. So just a phenomenal number on the stablecoin side. Blockchain rewards continues to be excellent. This is things like staking, so infrastructure services that Coinbase can offer that maybe an individual or a business isn't going to do themselves. Interest and finance fee income, and then other subscriptions and services. So you add all these together, and this is kind of the non-trading business that Coinbase is building. There's a lot of kind of there's a lot of little pieces and products. So they have a wallet, they have payment solutions, they've got all kinds of things that they're doing, and not any one of them is really huge right now, but as a whole continues to be a growth driver for the business, but it's a little bit volatile in how much revenue it's generating. That's why I think you maybe get a little bit of disappointment, whether you're looking at transactions or subscriptions and services if you are an investor. One of the interesting things is you continue to see Bitcoin be less and less important. A few years ago, this was like 50% of revenue was Bitcoin trading. Now it's down to 27% of the trading volume. Increasing are tokens like XRP, the USDT token, or Tether. Ethereum is still really big, but declining, just like Bitcoin is. So it's really diversifying the trading that's going on the platform. Operating expenses did increase pretty significantly, but they talk a little bit about this here. One of the increases is sales and marketing. Part of that is related to rewards related to the USDC token. So Coinbase generates a lot of revenue from the USDC token, and that comes from Circle. But what they're doing is they're saying, hey, if you keep your USDC on our platform, we will reward you with basically a yield on that asset that's sitting there. And that goes into marketing costs. That was an increase of $40 million or 4%, an increase quarter over quarter. So you can see that in the increase here. And continues to be just a phenomenal balance sheet for Coinbase. USDC tokens, $1.9 billion. Money market funds, $6.2 billion. Corporate cash, $1.8 billion. And then corporate cash held at third-party venues, $136 million. So in total, $9.9 billion worth of assets. So like I said, I think the quarter was solid, not necessarily spectacular, but we're not coming out of a crypto winter like we were a year or so ago. That's why I think what we really need to look at is how is the company expanding and building out its ecosystem in crypto and the blockchain. That is where we come to the announcement early yesterday. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. That was Coinbase announcing Deribit. This is a crypto derivatives platform. The interesting thing that I posted this was that Deribit had about twice as much trading volume over the past 24 hours when this deal was announced than Coinbase itself. So a lot of volume now coming to Coinbase from this acquisition. And what they're trying to do is build out a more institutional derivatives platform, diversify the business a little bit more, and then bring global operations to the strategy. $2.9 billion acquisition, price of $700 million in cash, $11 million of Coinbase stock. And they expect that to close by the year end. Now, I continue to think Coinbase is the leader in blockchain technology. There's a lot of things that are in the works. Their payment platform, they improved their wallet recently. The USDC token continues to grow. I think we're going to continue to see more and more use cases for the blockchain, and that provides a lot of upside optionality, but it is going to be kind of lumpy where that growth is coming from. But we're getting a reasonable valuation for Coinbase stock today. This isn't a, back the truck up, no-brainer buy point, but the price to earnings multiple on a trailing basis is about 38, on a forward basis is about 32. Like I said, Coinbase does have a really good balance sheet. It does have net cash. There's a little bit of debt on the balance sheet, but they have that $9.9 billion worth of cash as well, and that's generating really solid yield. So the company's really well strategically positioned. Now they keep adding these bolt-on acquisitions that are going to drive not only growth, but growth in the ecosystem that they're building. And at the end of the day, investors are betting on Brian Armstrong. Brian Armstrong is the founder, one of the visionaries in crypto and the blockchain. So I think he's the kind of person that's going to really lead this industry forward and ironically move a lot of the blockchain and cryptocurrency usage kind of behind the scenes. I think 10 years from now, we're going to be using crypto and the blockchain a lot more, and we're not even going to know that we're doing it. We're going to be using payments that are going to be on blockchain rails instead of credit card rails. And it's going to be completely seamless because it's just going to be a digital transaction using the blockchain instead of using a system that was really built for physical credit cards. So I continue to be a Coinbase shareholder. This was not one of their outstanding quarters, but it was kind of steps in the right direction. I think the acquisition that they made is going to be another thing that's going to just continue to grow their business. So those are the kind of things that I want to see long-term for the growth at Coinbase. But let me know what you think about the quarter and how the company is doing. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.